They are calling our attention to this fair value gap here, that price is most likely able to what? Retrace from here, because a fair value gap, whenever price gets to a fair value gap, there will always be a retrace or a reaction from it. So the reaction can be brutal or can be minimal. So one does not know which is minimal or which is what? Not minimal. So whenever you're in profit and you see a fair value gap ahead of the road, it is most advised that you just take your profit and move. An example of what happened, let me show us in Euro USD. An example of what happened, I'll show us in Euro USD. Now, price price stopped buying from here, selling from here, I guess. So let's go to a 1 hour time frame. So I think one of the guys here came into my DM asking for trade opportunities, and I was like, okay, may I still believe price will pump up? Of course, but price was still going to sell across like he said, but I believe price will pump up, so it shouldn't stay long in the sell. My reason for saying that was because I was expecting price, so you don't mind my chart. It's because of our class that we have all these chunks. So let me take them out. So it was because of, now when you look closely, you see that we have a fair value gap here. So now imagine you were selling and you did not note this fair value gap here. Price pumped into this fair value gap. It didn't even pump it, it tapped on it. And what happened? It pushed right up. And if you check my own, I have a sell waiting for me here and another sell at this point. So I'm just patiently waiting for the market to just sell. And once price gets to this, once price hits this level, once price hits this particular zone, I'm being cautious. Then once price also hits, but I'm waiting for price to majorly hit this order block here, because this is my order block here. And how do you know? There's one thing. Okay, once we get there, we'll cross. When we get to that bridge, we'll cross it. How do one know a valid order block and which order block isn't valid? So this is an order block, but I have a fair value gap ahead of it, so I'm cautious. My total take profit zone is at this order block zone. Why? Because we have a break of market structure here. If you look at the structure well, you realize that you already have a structure forming already. So I'm expecting price to pump in to this guy, then take another fly up. Or if he gets to this guy, he might just decide to say, I'm not going up, I'm coming down. But for me, as a retail trader, analytically and statistically, I'm stepping out of this zone. Do you get it? So I hope this explains well. So we must be able to see things, adversaries, and occurrences that would make the market want to go against you ahead of time. So you can be able to step out or do something reasonable before the whole thing gets bust right in front of you. So that's that about that. When we get to ICT, I will explain things for us in detail that will be more simplified. So do we see this here? So market busted out and started selling double top. The same thing go for double bottom, W, and the opposite of double top one is what that one does. Now do we see this head and shoulder crown pattern like I explained? So you take the share, you sell the short from the next shoulder. We have the first shoulder, but we don't know what is going to happen yet until the whole formation completes. So we have the next head, then market is not being able to break this neckline, then it creates a new shoulder, then you start taking a sell from this shoulder, then sell short to the neckline. I hope we're getting that. So that is that about that. Aha. So a clear image of market structure. So this is the reverse head and shoulder crown pattern. Still the same structure and the same rudiment to follow. So you can see the price moved nicely after it broke the neckline. I know you are thinking that yourself that the price keeps moving even after it reached the target. And my response is don't be greedy, like I said. Once price reach the neckline, be sure that you step out. It goes far beyond using your business. Your own business is you have taken what you are meant to take. And if you think you want to take more, eh, just break even. As the market keeps going, keep breaking even. Or if you want to keep buying, it will be a very, very, very disastrous move to even say you want to be buying as the market is going. Why? Because you will not have a risk to reward anymore. You just be buying because it's going. Because when you want to buy now, there is no particular point market to sell to. Now, for example, now I showed us something. Now look at this now. When market breaks out and buy from the neckline, and you are here, you've already stepped out, and market is here, and you are buying, 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 buying. So what if market starts selling? You don't have a particular expected risk of where the market will stop buying, stop selling before you can buy again. So you now buying is just based on sentiment and greed. So once you've been able to hit your calculative target according to the structure you've seen in the market, just take a responsible step out. As a gentleman, just step out. Else, you want to get yourself into trouble. And there is one thing, once you're in loss, it will be very difficult for you to want to take the loss in time. You will get it. So let's not be too greedy. So that's it about that. If your target is it, then be happy with your profit. However, there are strategies where you can lock in some of your profit. Like I said, lock profit. You put in your SL below your position or above your position. Lock profit in some of the profit and keep your trades open in case the price continues to move your way. You will learn about those later in the course. Yeah. So chart formations are I don't know if I have some trades that are in profit yet to teach us about that. Okay, my trades are in profit, but they are not yet in a substantial amount of profit for me to want to break even now. So I think I will explain as time goes on, as time permits us to do. An ascending triangle consists of. So I would like us to go and read from the summary. Now I've explained. Let us take a day reading. Page the School of Pipsology. Go and start reading from page 72. 72. The chart formation, symmetrical, ascending, descending, trend reversal, double top, and all of those ones, head and shoulder, reach 72 and 72 and 73. Yeah, 72 and 73. So at this point I will come to the end of today's class, and I want to believe today has been resourceful, and it has been a progressive class for us, session for us as well. So I haven't said much. Do we have any question before we call it a day? Anybody with any question? Please go ahead. If you are with any question, please kindly go ahead as I am with you. If you don't have any question, let me know. Okay, I'm coming, Mr. Sampson. I'm seeing your message now. I'll read through. You just need the previous video and this so you can listen again. Support on this. Yeah, I've sent all the previous video, but the last video, the last class we had, the video was not really showing the presentation. It was only showing my logo. I forgot to bring down the logo, just like it's showing now. So I don't know. However, it's on my YouTube, so perhaps you will just follow the voiceover alone. I will send the video in here. I'll send it here. So the video for this class 2 will be uploaded today. All things being equal by the grace of God. The network is favorable, but sometimes it can takes me, like, I think it requires a lot of big, and sometimes the network around my place here is always somehow junky. So let's see what happens before tomorrow as we uploaded. So that'll be all for today. Do we have any other message, please? I'm sorry. Any other question? So don't forget, and please, yeah, please go ahead. If you're not in a noisy environment, you can ask. Yeah, unmute yourself and talk, Mr. David. Alright, I don't know what you're doing. Maybe you're talking or typing. But while you're doing that, you're waiting for the message to come in. However, if you're not in a noisy environment, you can unmute yourself and talk. So alright. While we're waiting for you, I was gonna say something. Okay, I want to believe we started trading our $50 account. So by now we all should be trading. Okay, after when you finish, I will communicate with us. I'm with you now, Mr. David. You can go ahead. Yeah, sure I can. Okay. Okay. Uh, yeah, I'm coming. I'm sure I'll definitely do now. Yeah, we're good. Yeah. Yeah, I can hear you. I'm with you, sir. All right. So I get the question. So this is it now. Now the reason why I actually have not been taking. I was just like I said, like I always say. I don't know if I've been saying it before, but I will say it now. Um, the activities we do in the market should be 99% waiting. You get it? 99% observing the market without taking trades. So when you observe market without taking trades, it helps your emotion and your trading psychology to be in check. So I was patiently waiting. So one of my reasons for expecting a buy from here was because, one, there has been a structure in the market. If you look at my long time frame here now, this is 4 hours. Are you seeing this? This is a 4 hour time frame. Now, and I have a potential breakout of the market from here. This was a general breakout. I will see. Will I say, yeah, this was a general breakout. And if you look at the market very well, market has been forming a structure like this. Sell, buy, it sells, breaks the low, buys again, then it has sold to break this low and this initial low. Are you seeing this? Now, my expectation here is price should begin to look to buy back to this sell zone so we can take a new sell short. Do you get that now? I don't know if I'm communicating with you. Okay, I think yes, I am. Now, the reason why I saw this buy was because I did not take the trade, but I waited for the buy to come to surface. Why? Because one, there's a breakout. Look at the structure here. Look at the structure. Remember, I said there's always a structure. This is a downtrend. Market has sold here, went right up to the next sell zone, came up, came down to break this sell zone. So now, of course, market can either keep selling or start what? To buy back to this sell zone again, so we can what? Sell again. You get? So now, whenever there's a breakout in the market, it is most likely that every retail trader will have stepped out of this sell from this point, like I did. I was in this sell and I stepped out of this sell. Immediately the market pumped out, broke out. So I patiently waited for this market ranged here for like a day. It ranged for like 1 day before the market now eventually what? Broke out of this line. Now if you look at it, this is a 4 hour time frame. Look at what price has been doing within that 4 hour. This is a rejection. We've not done candlestick. This is what we call an hammer, or we can call it gravestone. No, this is not gravestone. This can either be an evening star. No, a morning star. A morning star. Yeah, this can either be a morning star or an hammer. All of these candles have interpretation. Now look at these candles now. They just keep going back and forth, back and forth, back and forth, back and forth, back and forth. Now they are not giving us this symmetrical structure on 4 hours. But when you come to a lesser time frame, like 15 minutes, you will see it that it is beginning to form a symmetrical structure. Are you seeing it now? So it was because there was a breakout. Eh? How do I do it now? Okay. Let me go to trading view to explain this. Let me draw out the structure for us. Mm. Now, this is what happened here. This is what the market has been doing on that chart. Now, the last buy, now market now sold. So immediately the market sold. Now, what are we expecting again? A buy, good. And remember, when a buy will surface, it won't just, sometimes it might just surface and just move buy up, and sometimes it might just consolidate before it goes up, just like the one we saw now did. Now, price now consolidated in a symmetrical way after we had the potential breakout, which is what we are seeing now. What we saw, which is the question you're asking now. Are you seeing the symmetrical consolidation? Then price now eventually what? Went right up, which is, this is where we are now. So the reason why we are taking that buy, expecting that buy, was because market has broken out of the recent low in the market. So all expectation is for markets to what? Return back to the top. And if you look at it now, over the time, yeah, that was why I was able to draw out a symmetrical move. But of course, before I could draw it, I've seen it has occurred like 2 to 3 times before I was able to spot it. I didn't just spot it. Of course, I am expecting price to push up, but I wasn't expecting price to do a symmetrical move. So it is not what I want that I will look after. I look after what the market does. So when one, I was expecting the buy, but I didn't know it would come in form of a symmetrical form before it now break out. You get it? So the symmetrical form came out, it's range symmetrically. And after the whole super story, what happened? Market broke out, went far up to the resistance, which is the next sell zone, which is this place. And now you see that I have my sell positions in that chart. That was why I placed my sell positions here. which is once price broke out of, and if you look at it very well, I'll go back to the chart very soon. Okay, let me just go back to the chart. If you look at it very well, so this blue label, this blue block is my 4-hour order block. This particular blue block is my 4-hour order block. It was the order block I spotted on 4 hour. Are you seeing it? This is the size of the 4-hour order block. And the black one is my 1 hour, I guess. Yeah, the black one. Can you see the black one here? The black order block, this here, this black one is the one I spotted on 1 hour. So now you learn from one thing. You can mute yourself now. Mr. David, please, you can mute yourself. I think the door they are opening there is causing obstruction with my hearing. Don't worry, I'll mute you from here. So this is the next sell zone. The 4-hour block could not hold price. Sometimes it could be 4-hour block that will hold price and start selling. Sometimes it could be 1-hour block that will hold price and start selling. So now I spotted 4-hour and I spotted my 1 hour. So one of these two will do the justice. And you realize what I did. I placed an entry on 4-hour and I placed another entry on 1 hour. And at the end of the whole thing, what happened? I have my stop loss at the block here. So whatever makes price pump up out of this block, it stops me out and take me out in loss. Why? Because it implies that those other blocks are not valid enough. They are not valid enough. Now I went to, if you come to 15 minutes, I did not spot 15 minutes on. Why? Because I don't have valid order blocks in 15 minutes. My order blocks in 15 minutes are still within the same range as 1 hour. So I can't work with those order blocks. So the lowest refining of my order block I will work with is the 1 hour order block. So which is this? And if you look at it now, price might eventually react inside this block and start what? Selling. Do you get it now? So if you now, for the reason why I asking me why I took the buy was because price has broken out of the lowest low. So cutting out demands that price should what? Return back up. That was why I said trading a retracement, buying a retraced setup whenever the market is in a downtrend and you are buying it can be very, very dangerous sometimes. Why? Because you need to spot a very good entry before you can buy, because markets will break out and if they tell you that I am not done selling, I want to keep selling, and everyone will think, okay, market wants to start buying from here. Of course, I was in this before it now eventually came down to loss. I had like one position here buying, it came here, I entered another one again, went here, I had to close at in profit total. Why? Because the market was not ready to do a potential buy. It was still going back and forth, back and forth, back and forth before it now started the symmetrical structure, then broke out, then bought. So do you get that? I hope I've been able to answer your question. So what formed the market is the market. I just follow whatever the market formed. And if you look at it here too, it did the same thing. If you look at it at this point, market did the same thing. After it broke out of this structure, what happened? This one is even ascending triangle. Can we see it? It did an ascending triangle, then bought up, then eventually sold down back. So do we get that? So that is that about that. Have I been able to answer your question, sir? Mr. Omoloye, I hope that's justified. Do we have any more question? Do we have any more question, please? Okay. Is there a particular time frame best to study and check for patterns before trading maybe from our next class, I would like you to ask this question again. So this, as from our next class, we'll be studying what we call um, top-down analysis. A top-down analysis will help you understand this particular question you asked. So there is no particular time frame, but the best time frame you will find pattern in time as a retail trader is from lower time frame like 15 minutes, 5 minutes, 30 minutes, and preferably probably 1 hour. Because you want to trade in a day and get your profit in a day. That is what makes you a retail trader. You get so we don't trade like the big banks and the hedge funds that they just trade, they open their position for the rest of 1 year, 2 years before they take it out. So they just oversee the market movement at the generally and they just enter after they don't close until after a year. But retailers like us, we open and trade within 24 hours. So the best way you can get this kind of setups is from lower time frame. So which will now take us to what we call top-down analysis. So please ask this question in our next class, which is Monday. So any other question? All right. So I see Mr. Mole is actually eating up materials and studying very well because he's always on my DM all the time for with questions, and I appreciate we are all doing the same thing, consistency base. I don't know what you are doing right now that is paying, but adding forex to it is a good advantage as well. So, and at some point in your life, you will get to a point where you just say, okay, well, I think I should just sit down with this thing alone and just take every other thing as secondary while I take this as primary. Of course, you still do other things, but then this become your primary source, and your primary source provide for the secondary source. So as time goes, not now. So let's shift with knowledge first, and when we profoundly have the knowledge in exponential, then we can go for other big doings. We get it. So God helping us. We'll meet again next Monday. So prepare. We are having a guest speaker to take us in the class next Monday. So come prepared, and I hope we'll learn something and we've done something productive. So thank you all for joining today, and as usual, don't forget to follow me on all of my social media platforms and watch the videos on YouTube. Drop your comment as well, like as well. So thank you guys and have a very productive day and happy weekend in advance. Yeah, I've got a meeting. I've got a partnership event. Alright, please that's okay. That's okay. Anytime you watch the video, just if you have questions, just come back to me. I will answer them. I'm always active online, so let's see what we can help us with. You're welcome, Mr. Ololudatu. Oh, this is your sister. Alright, so that's it. Thank you guys and have a nice day.